How are we all feeling this week? Hope you're having a great week so far. Welcome to the start of a new trading week. We had quite the week last week, didn't we? We're going to go through that. We're going to go through the price action from last week and show the similarities that I'm seeing repeat themselves this week. Let's just see who's coming in here. I can see that we've got, who have we got? Evan, Rata, Romit, Matt, how you doing? Toyin Crypto, first time here. Welcome. Hope you enjoy this video. Brad, Ben, Prasad, what's up? Faith, good to see so many people again from the TTC Discord. I saw you guys all doing your technical analysis in the chat this morning. Theo, Taylor, Darren, Alpha's in the house. Yep. Okay, let's have a look at this, what happened last week, and show you what I'm seeing as a similarity so far in the price action for this week, and just some things I think we need to be careful of. So early last week in the Discord, I don't do my YouTube updates on Monday, but in the Discord, we had called out this potential M formation before it formed. We were expecting the second side of the M to actually be a higher high compared to the first, simply because of the leverage that we saw in the background. We got exactly that. So that was our trigger to short. Pretty legendary entry, if I do say so myself. And then we got bored for basically 2 days, where the market makers held price sideways for 2 days. However, there were some things in this range that we needed to be aware of, which was number one, initially they held price in this range here. Let me just get rid of this. So initially they held price in this range here, and then we noticed that they spiked a bit lower. Now, the reason that they would do that is because when accumulating, or when we're stuck in a range, the market maker is accumulating. That's one thing we need to know. So in this range, we knew the market maker was accumulating. The only reason they then extend the range is because during that accumulation, they could not induce enough traders to open positions. So they needed to give a little bit of a false move to get us to commit to trades. And we can see that that worked, because that would have encouraged a lot of breakout traders to open short positions just under that range. Those short positions were now trapped. And a day later, we saw the market maker move price up and break the range up. This also lined up around the, well, no, hang on, it wasn't this one yet. It was the next one. So we saw this range here. Now, this would have encouraged traders to go, breakout traders to go long. So at the same time, it trapped long traders. It took out the short traders. Then the market makers moved price where they wanted to anyway. This move down here liquidated longs. So in this range, both longs and shorts got liquidated before the price moved where a lot of bearish people thought it was going to move anyway. But unfortunately, they would have gotten taken out before the move actually happened. That led to our drop level 2, and then we pretty much had the same thing, another range. And if we spread this out, it doesn't look like much when it's small, but when we actually zoom into that area, you can see here that the same behavior went on, where we had the range, we had spike lows to induce shorts, then we came up and spiked above the range here, and that would have taken out what was I going to say? That would have taken out those shorts and induced longs. Exactly the same thing happened. Another one here, and then eventually price fell away for the next level. Now, keeping all of that in mind, when we look at the price action over the weekend into yesterday, we were basically at the same position. So we can see over the weekend that the traders were trapped into a sideways consolidation. We know that because we know that the weekends are a trap for trading. We had a couple of spike lows down here. Again, that would have been a breakout level and would have encouraged breakout traders to short. So those breakout traders were now trapped, who shorted down here at the very low, and they may have gotten taken out on this spike up right here. in yesterday morning's dead gap zone. Now, why yesterday morning? Because that's Monday. And what happens on Monday? Fake move Monday, which is designed to liquidate everybody who opened positions on the weekend. So now we can see it very clearly. Look how that candle closed right as we came into the dead gap zone. And there we go. Now, this one here had taken out everybody who went short over the weekend. We drop price back down, and it takes out also everybody who went long over the weekend. This is why it's very tricky to trade weekends, because it's very unpredictable and you know that you're being set up for a trap. So in that entire period of time, we have a repeat process where the market maker gets to accumulate contracts. But what our job is, as traders who can't see what their intention is, we can only, try to predict it as based on what we're seeing on the chart, is that where are they accumulating the contracts for? To push price up or to push price down? And I see, again, a lot of social media sentiment. I've seen it also in our own chat as well, where people are still feeling very bearish and that this is going to go down further. And look, that's a high possibility. However, you trap yourself when you build a bias. And I say this a million times, like, just because price went down, it doesn't mean it's going to continue going down. It doesn't mean we're going to 13K now. You need to get yourself out of that trap and just trade what you see. And what we can see, what we can identify based off the model that we trade, is that the first step is to identify our last peak formation. So come Monday morning, when you zoom out, the last peak formation was here. Then you count your levels from there. We can see that we've had 1, 2, and 3 levels. We can see that this is the level 3 consolidation. So now in that level 3 consolidation, we have to look for, can we see a repeat? It's a reset where we're going to go down another 3 levels, or can we see a W formation where it's basically the opposite to this and we should go up? Now, to me, we are in the dead gap zone, so it is currently the highest point of manipulation in the day, so we don't want to get too carried away. But when we zoom in, if we are looking at what is on the chart, we have a W formation. Now, and that is our signal to go long. In addition to the W formation, we have a break of the 50 EMA, the blue one there, and that takes us into rise level 1. Rise level 1 usually goes up to around the 200 EMA, and then if it's going to be confirmed, it will come back. So we've only just passed the 200 EMA there. If it's going to be confirmed, it will come back and retest the 50 EMA. That there is your cue to enter a long position. If it successfully retests the 50 EMA, it's going to also fully recover this vector candle right here, right? So that would be a good entry for a long position. It can close lower, as we know, if this is the peak of the W right now, and as long as we create, I don't actually need that tool, as long as we stay above this low here, we can retest lower than that level. So we could come all the way back to here and it's still a move in play to the upside, as long as it creates a higher low. But the ideal zone for a retest is going to be here. Now, what we also need to remember is that a W is not confirmed until we have the successful retest. So when you're in a period where you're feeling really unsure, which is now, which is fair, then you would skip the entry on this W because it feels too high risk, and you would wait for a retest of that 50 EMA. And as long as once we get back there, the candlesticks look bullish, you can see hammers and, candlestick patterns that look bullish and make you feel confident that we're not going to break below that 50 EMA, then that would be your more conservative entry to the upside. However, that doesn't mean I'm bullish. It means I'm trading what I see. The other thing we have to keep in mind is price is right now in the sell order zone from the heat maps, which I marked out earlier today, which we know that these can change once Asia actually opens. But we can see here that we do have pretty high level of shorts from 21,450 to 21,650 currently. And we had some really big longs earlier today, but they're kind of not there anymore. I think 21.9 is the only one. No, that's changed massively. So we had huge long orders down here this morning when I drew this up, and we had very, very large long orders at 20,550. That's now moved to 20,900. So what does that tell you? That in itself. So 20,900 tells you that the buyers don't think price is coming all the way back down here anymore, right? And that they're missing out basically. So what do I have to say next? Next, I have to say, sorry, I just had my brain turned off for a second. Now, you can't enter along from where the price is now. Like it's too late if you didn't get in off the W. You have to wait for a retest. You'd be longing into this wick here. You'd be longing into these wicks. Like, it's just too dangerous. So you don't have a choice. If price just keeps continuing up during Asia, you've missed the move, and oh well, we reset and we wait for a retest. But the thing is, we've got to get through this whole sell zone anyway. So it's either going to push right through and be extremely bullish today, which wouldn't surprise me considering how bearish social media is right now. Like, we kind of know that the market maker plays games with us and entices us into trades by making large moves in the direction that we're not expecting. So that's one possibility, that this rise level 1 just keeps going through that sell zone. If it does, that's going to be great, because when you do get your retest, we've conquered all these bears here, and that's fantastic. They're going to move, they're going to shift their orders up a bit higher. So in an ideal world, we actually want price to push up, come back for a retest, get your entry, and then we've got these levels that we have to conquer next. So we've got this level here, which is at 21, let's say 21,550. That's kind of the top of the current range anyway. When we zoom out, it's the top of this range that we really need to break, but it's also the 50% area of the last 4-hour vector candle. So we may push up to that like we did here yesterday. We may push up to that, then reject back, get your entry, and then we would expect it to go through it the next time. So that's one thing to watch out for. If we do break that level eventually, then 21,730 is the next one, which is the 50% vector candle of the monthly. And then if we break that, we've got the 50% vector candle of the daily at 21,985. Now, in my opinion, that's going to be one of the key areas to watch if you happen to get a long position. That's going to be one of the key areas. The second key area is going to be up at around 22, let's say 22, just a little bit under 22,300 is going to be another level for me if we can get all the way up here. Excuse me. However, and that could happen in our 3 rises. So we have rise level 1 happening right now. If we retrace and we get rise level 2, maybe it'll come up to one of these. Retrace, rise level 3. We're looking at this, 22,300 would be great for this entire move to be finished there, because it lines up with the 800 EMA. And the other thing too, the reason why that's kind of got my interest is because if the best we get is any of these lower levels here, then we are not even started getting into this zone right here. So we know we have a massive imbalance here now because of that huge red candle that was formed on the drop. And we know that the market makers have to come back to rebalance those areas. Now, they don't have to come back immediately, but at some point in time, they do. So will they do that? Is this rise level 1 setting us up for the market makers to come up, recover this zone, 50% of it even, like not the whole candle? We know the 50% area is the area to watch. And then potentially that lines up around the 800 EMA, and then we get our next drop to the downside. So higher time frame, longer term, yes, potentially still very bearish. but it doesn't mean that we won't move up before we move down. And that's what I want to be clear about today, because we know when we look at last week's price action, they moved up before they moved down. They moved up before they moved down. And you can exploit that. Like, there's a trade there, you know? So instead of just sitting it out, waiting, doing nothing and leaving that money on the table, trade what you see. If you get this nice push, if you get a nice retest, then there's an entry to the long side. When would you not long this? If we break the 50, you would keep your hands off this trade. So if price was to come down now and break below the 50, you're going to sit on your hands for a little bit and you're going to wait to see if it creates a higher low. If it creates a higher low, there's an entry, but if it continues down beyond this level right here, there's no long position. So we cannot break the 21K region if you want to take a long position that you may be able to hold just for 2 to 3 days until we get up into those higher levels. Now, why is this 22,300 the area that's kind of juicy to me? For a number of reasons. Sorry. It mostly comes down to the high block. Is this the right one? Yes. Mostly comes back to the high block level. So currently we can see that the delta is still to the short. So people are still feeling more bearish and bullish. It's only at 6 billion. So, you know, really that could mean that the market maker is on the way to change the delta to the other side. So to encourage people to open longs, or is just taking a breather before potentially moving down further. We've got liquidity either side of price, like a fair amount. So really, you know, he can take his pick. We've got a very big level down here for the longs, which sits at, if this wants to load, at around 20,000, let's just say 20,700. Now, magically, 20,700, if price were to spike down there, this is a previous area that I marked out earlier, which is previous, I don't even know how far back it goes. It's a little bit too far back, but it's a previous vector candle that has not yet been fully recovered. So how interesting how it all just lines up, right? And then it's also the low of the week. And in addition to that, there was one more thing. Oh, yes. There were orders there previously this morning in the heat maps, which have, as I said before, they've disappeared now, but they were sitting there earlier. So maybe that one's gone now. We won't come back to that level, but we still need to be aware of it just in case we do reject that W. To the upside, however, we've got a ton of liquidity here available for the market maker. And this just really sets up for the market maker to give us a little push to the upside, take out all these shorts, then continuation down. And that could, as I said, it could happen in a day. It could happen in 2-3 days. We don't really know. But when we look at this highest level of those three circles, that's sitting at 22.24. So isn't that, again, just magical that if price comes up to here, it's 22.27, and that's the 800 EMA. So I'm really like, you know, even though I think that we are not long term, but say over the next 6 weeks, things don't look great for the markets at all. I'm not ruling out that we're not going to go up before we go down. And all I'm really watching for is all of these orange levels along the way. And I think if we are lucky enough to get up around that 200 EMA, we know that we're going to liquidate those short positions. The market maker is going to build massive bags there. And all we have to do is look for bearish confirmation at that point, M formations, etc., and open the juiciest shorts of our lives. Maybe second juiciest, because last week was the juiciest so far. So what else do I have to tell you? Yes. In addition to all of that, let's talk about news events this week. I'm not all that skeptical of any of these news events. Now, of course, as we know, news events are always used as an excuse to move the market. I don't see any of these ones coming up as like, you know, huge problems until we get to Friday, but we'll get to that in a second. But leading up to the week, I would say trade what you see. Any of these news events, if they do cause a big move, it's because the big move was going to happen anyway. So that's that. But the one that is the one to kind of be careful of is Friday 10:30 core PCE price index. But if you're trading this method, Friday 10:30 p.m., we should have taken profits and we should be at the bar drinking and enjoying ourselves. So who cares, really, right? Who cares about that one? But it could be that price moves up this week. Like if that's going to, end up being not great news, it could be that price moves up this week into those zones to set up for this to be another drop to the downside. But it could also go the other way. So keep that in mind too, because it really depends on what comes out of this. But I think that this has the potential to be a pretty big market mover. So I think if the PCE drops, it should be good for the market. But if it doesn't, then we got more downside to come. Finally, we also now need to keep a very, very close eye on the S&P and the NASDAQ, because at the end of the day, even though we're seeing a W formation on Bitcoin and everything is looking great, we don't have a chance of upside unless the NASDAQ and the S&P start to have a little bit of a recovery themselves. So you really have to keep a close eye on this. What I do like about the NASDAQ currently is that on the 1 hour, we have bounced off the 800 EMA. Could this potentially be starting a W formation? We only have the left side, so it's way too early to tell. But it could be doing that just to have a little bit of a recovery before further downside as a day trade. That's all we need, is just a little recovery. It doesn't make us macro bullish. So that's one thing to keep an eye out. But if this can't do that, if these can't create those Ws, then crypto's going down as well. So really, of all weeks, I would say watch these very, very closely. I have been banging on for the last 2 weeks about the S&P and the NASDAQ on the weekly time frame, and that's 61.8, and we did get that exact rejection right there. Does that mean that we have a repeat of the last recession about to come in? Not necessarily. It doesn't necessarily have to be as bad, but so far it's kind of playing out the same. And again, with the Dixie, same thing. So as long as this Dixie moves up and the S&P and the NASDAQ move down, even if Bitcoin wanted to be bullish, it can't be. However, the reason I say watch these first is because they're moving first. So if you can't see this create a W, then that's going to give you an idea that, Bitcoin's probably going to come down and, maybe you should not be long right now. So very, very close eye on these right now if you're looking to trade crypto in general. And finally, just wanted to, this isn't an updated chart, but just a reminder that, on average, September is a terrible month for cryptocurrency, for Bitcoin in particular. We know this in advance. However, this is great news for people who are long-term investors. And, if you're looking to start building a portfolio in crypto, then you want to be buying things that you like or that you believe in when they're dirt cheap. So this period, when we just had the drop from last week, it's kind of a little bit of a hint of an area where if you believe we're not going to go too much lower, you would very slowly start to buy into the things that you believe in. And I say very slowly. The way that I kind of treat it is if Bitcoin is currently 20 grand and I would believe it could go to 10, right? That's another 50% drop. If I was to buy a little bit now and it dropped 50%, would it hurt? And the answer has to be no. So whatever amount that you're going to put into, you have to still have reserves. So the way that I personally would do it is, let's just take an example. Let's just say I wanted to put 10 grand into into Bitcoin alone, right? And I want to buy at 20K, but I'm scared it might drop to 10. I would buy 1 grand at 20K. And then if it dropped down to 19, I would buy 1, 18, 1, 17, 1, all the way down to end up getting an average entry. You're never going to pick the bottom. That's just not how it works. So, because every time we get to a bottom, you're going to think there's another bottom coming. So instead of missing out completely, have a long-term plan. Know that we are leading up into even August, isn't particularly great when you look at it in comparison. We are leading up to a really, what should be not a great period for the market. And if that were to happen, also know that it doesn't mean that by October you're going to be making money. The only reason you would start buying in September is because you have a plan to hold whatever you buy until the next bull market, until you feel the next bull market is ending. So we're talking 2025. You're not buying anything now until unless you want to hold it till 2025. So don't expect returns in a month on anything you decide to buy. But if you are a long-term investor, then, if we have a red month, it is going to be a perfect time to pick up at least a little bit of the things that you really like and you really believe in. Now, let me just, yes, thank you. Smash the like button if you have learned something so far, if you have enjoyed this so far. I'm going to quickly go over ETH before I leave you guys. It's basically same at this point in time. We did have this area here as a previous area of interest. These two candles here came back to recover them. And that means on ETH that we now have to go up to the next area, which is up here, which we have not come back to at all. But interestingly enough, if ETH does continue up, this 800 EMA is going to come closer to that area of interest. So that's pretty much what we're going to be watching for. And what does that put us at? That puts us around 1660 to 1685. And if we can get right up to that 800 EMA, it's going to be about 17K. Then it's going to have this big area here to recover. Now, that's the wrong thing. I really don't know at this point in time. It's way too early to tell, how bullish we should be this week. All I can say is that we have the start of the setup, which is great. But I'm not really calling, 1750, 800, 1800 ETH again. I'm just saying that's an area of imbalance at this point in time. What we need to know is, do we have a W? And yes, we do. Very, very clearly have a W. Do we have a break of the 50? Yes, we do. Do we have a retest? No, we don't. So with ETH, because it tends to be rather a lot more bullish than Bitcoin, especially lately, it may not come all the way back to retest the 50. It may only come back to retest the 200. That would still be an area of interest because we have this vector here. So if price just came back here and it hung around and it stayed above this zone and, looked like it was creating the higher low, I would say that we've still got two more rises coming. The first goal would be to cross the 50% line at 1650, and then hopefully we recover this whole area and make a run for the 800 EMA, wherever that is at the time. So that's it. That's all I've got for you this week. Let me just quickly scroll these comments and see if there's anything important that I missed. Smash up the like button if you have not already done so. And also, just a side note, as I'm going through these comments, our current Discord is closed off for now because we are heading towards the end of the month, and currently we take our members through Patreon. Patreon charges you at the time you join and then again on the first of the month. So if you were to join now, you'd be charged again in 7 days. So we do close it off. I have closed it off because I don't really want you to be charged again. But in addition to that, we are moving to a whole new system as of next month, which will avoid that happening to you guys. So we will launch that around September 1st. We'll probably give you more details about that soon, but we are launching, in addition to our trading tier that we have now, we are launching an investing tier as well. If you are keen to know more about it, there is a video on my YouTube channel already. If you just go to the YouTube channel, it's my featured video, just a 6-minute video, and explains in detail what's going on there. So let me have a look. Quish, do you still have the short open since 25K? I know you took profits on the way, but is it still open? No, I actually closed all of my positions. So I had a short from 32K as well. And I had a long from 19K, and I closed all my positions because I need to concentrate on what I'm building for you guys, and I just couldn't be managing trades at the same time. So yeah, I'm out of everything, but I did take this W trade last night. So, but that's just, you know, a short-term trade for the week. That's all I'm in currently. All right, guys, I'm going to leave it there. Have a great week. I will see you guys tomorrow for tomorrow's update. Trade well.